so much, Jeff Pearce, for that. Let's trade it now with Tim Bigham, options strategist at Buy Alerts. How are you approaching your example trade on this one?
Yeah, absolutely. Looking really for continued consolidation in this stock. It's been kind of the big underperformer of one of the big cap, mega cap stocks in the NASDAQ 100, certainly trailing the triple Qs on a performance basis by about 6% this year. And as Jeff and you alluded to, you normally get a slight bump post, Prime Day, about 1% or so might get that lift there. July actually has been by far the best performing month for Amazon and the market generally since the financial crisis ended some 17 years ago, showing almost a 7% gain for the month here. So I'm cautiously, I guess, somewhat bullish on Amazon, although I think the market's gotten ahead of itself, so it's kind of a yin and yang. I think we'll continue to bleed out sideways. So taking advantage of what is somewhat elevated IV has popped recently in Amazon, and just selling a short-term iron condor, the July 18th traditional 235, 237.5 call spread, and 215, 212.5 put spread, basically with a nice cushion on either side from the current price of the stock for the shares to move up or down here, collecting about 75 cents or so, risking somewhere around $1.75. So like that risk return here of about 42% if the stock stays somewhat range bound, and we have earnings at the end of the month, so I think that'll kind of mute the stock reaction as well to any big moves in front of earnings.
Okay, so cautiously bullish, as you say, a lot of wait-and-see mode when it comes to this, particularly when it comes to the report card, but also with regards to a little bit more visibility perhaps on tariffs too, as Jeff Pearce was describing just before you came on. I mean, there's a lot of metrics for investors to sort of, look through. I mean, what are you looking at specifically? What's most important?
Yeah, I think, if the companies kind of give more of an all clear that business hasn't been hurt that bad, certainly Amazon being one of them going forward, I think that will provide a little bit of relief. But, looking back, valuations on stocks generally at extreme simply because AI has kind of outweighed the tariff fears, at least so far here. At some point, I'm still a believer valuations matter, and I think the market's gotten a little ahead of itself on that aspect, but Amazon kind of mid-tier as far as valuation. So I look for Amazon and maybe Apple as far as those mega cap stocks to be somewhat outperformers maybe to the Microsofts and Nvidias of the world over the next month or two.
Okay then, and talking of getting a bit ahead of your skis, what are your sort of thoughts on the overall market performance today? It's a bit quiet. Particularly when you look at the S&P 500, flat as a tack right now. So is the NASDAQ. I mean, what's your assessment of what's going on right now?
I think it's really, no one is really aggressively taking, stocks higher here. This has been one of the quietest breakouts for sure we have seen for stocks that have kind of just dribbled up to fresh new all-time highs, but with not any conviction. We see the 10-year yield creeping higher as well. So we're having that kind of overhang of rich valuations, certainly higher interest rates. Rates aren't coming down here. So I don't think anyone's rushing to get in, but at the same time, we always have, it looks like at least until we don't, those dip buyers. So I think we'll continue to see this kind of sideways action, one day up, one day down, until we get some more clarity, both on the tariff front and on the interest rate front as well.
Yeah, not such a meaningful pop of colour on that heat map, that's for sure, but interesting that the small caps seem to be outperforming today, which could indicate a little bit of rotation going on right now. Tim, it's been a pleasure. Thank you so much for joining us. Really appreciate your thoughts. Tim Bigham, options strategist, Buy Alert.